We're pretty much back with another one. We're going to show you guys how we executed today, how you could have done the same. And in essence, we're going to teach you how to execute when you actually see retracements happen on lower time frames and have enough confidence to actually go ahead and actually be able to long that, considering that you don't want to catch a falling knife naturally. So if you do find this educational, make sure to like, follow, and subscribe. And yeah, let's get this thing started. So today we actually just traded gold. It was the only that really looked clean to me. Coming into the morning, everything else looked pretty like clunky. And I didn't see a defined direction as far as where we were headed and where the draw was. So looking at gold, obviously this is bearish. However, obviously I scaled on all time frames before I disregard a pair. So on the 4 hour, we actually broke structure here on gold. See this? We broke structure here. And we also retraced back into the order block that caused it and continue on higher. So that was very interesting to me. So on the hourly, I scaled down to see what this move really meant, right? So what did that mean? We broke structure here. This was the order block that caused that move, tapped it, and didn't even break hourly structure and continued on higher. So at that point, I'm thinking, okay, yes, this may be a liquidity sweep for us to continue lower, but what would be the right confluences in order for me to be confident in the fact that we're actually heading higher, right? So what does that mean? I need to get down to a little bit of a lower time frames to see bearish invalidations and bullish validations, because the hourly and the 4 hour are in my favor and the daily is currently retracing, which is what we just said. Time frames are currently aligning. Daily is retracing. As you can clearly tell, the 4 hour flipped. We retested the order block. We're heading on higher. The hourly is bullish. We swept liquidity here, and then we're still within bullish structure. Now we scale down to the 15-minute, and we want to see if this right here, this move here, was not a sweep, right? So what would make that move a sweep or not? Simple. See this 15-minute flip bearish here, right? But really, it didn't break external structure. It did break internal. So what would I need to invalidate this 15-minute break of structure? I'd at the very least need a retest of that 15-minute order block right here, and then get the invalidation of that test. If we don't make a new low off the test of the order block and we continue to make a new high, that's likely because structure is currently bullish, and we're going to continue invalidating that and head on higher to these draws like the Asian high and the previous day's high, and also 50% of that fair value gap, right? So where did I really execute here? I actually saw one important thing here, the 15-minute swept liquidity here. But really, the magic was all happening on the 5. Because to invalidate a 15-minute break of structure, I would have to have 5-minute invalidation, right? I'd have to say 15 minutes bearish, but the 5-minute just invalidated the order block that was made, as you can tell right here. This is the bearish order block that caused this 15-minute break of structure here, right? Yes, in its internal break, but nevertheless, we consider those. Order block gets mitigated. We get the reaction off of it. But what do we proceed to do? We break structure. See, that's a very key thing. Now I'm thinking about execution points and where I could execute. Some would say, why didn't you execute on this retracement back into here when you saw this break of structure, right? Well, one thing, quite simply, 8 o'clock was not here just yet. 8 o'clock came in at this candle, which gave us a massive reaction. So at this point, I'm thinking, okay, I know that news comes in here at 8:30. Ideally, I'd like to have the trade be a little bit past news or as close as possible to it, so I could have my stop loss within a decent range of the anticipated volatility. But really, that wasn't even what was in play. What was really in play was this fact here. I wanted us to mitigate a fair value gap on the low time frames, meaning the 1 minute, and just take the trade off of that. So immediately after seeing this 5-minute break, I just said, okay, all I need at this point is confluences in order to trade it. I waited for a reaction. I never got a break of structure here. If anything, even if I did get a break of structure, I was looking for a break of structure and an inversion of a fair value gap, because that would have given me enough confidence in the fact that this move that we just saw here was not a liquidity sweep. So with that being said, and seeing this build up here, and seeing that this was the obvious demand that caused that rip, I was thinking to myself, oh, this may actually end up being what? A 5-minute liquidity sweep, as you can tell here, to entice early buyers, take them all out here, and then go lower. Sorry, don't mind the noise, mind the noise actually. So what do I expect here? I see the buildup. I see the liquidity sweep that happened here to take out early buyers. And then I also see the move that induced the sellers, right, into here. At which point I'm like, okay, awesome. Give me an inversion of a fair value gap. At this point, the risk to reward is relatively high. I see this, and I pretty much execute. Now, I could have waited a little bit and executed off the break of structure and the retrace, But this is pretty much where I executed.